We're going to shift gears entirely here and talk to strategy with Drew Matus, more focused on what's happening here domestically with the Fed. You saw the minutes. Not everyone was ready to go, I guess, with more easing, and it really looks like people are on the same page in terms of a wait-and-see attitude right now.
Yes, the Fed seems to be telling everyone they're on hold for some time. More importantly, I think, from my point of view, it was the talk about negative rates and how they basically came down against it. And I think most U.S. investors...
That's not a surprise, though. Can you imagine if we said, yeah, we're thinking about it? Or if there was some positive...
It hasn't stopped them from saying things like that in the past, where, maybe not quite that bluntly about negative rates, for example, but...
we have more tools left, even
we have more tools, things like that. What we want is a return to normalcy, and that's what markets are actually been benefiting from the last couple of weeks, which is it seems like different risks are moving towards a resolution. It doesn't even matter what that resolution is. Once you know what the outcome is going to be, you can price it and you can move on from there. The problem we've faced in the last couple of months is we have a lot of different things that can go a lot of different directions, and it's very hard to put a price on that. And so then you get markets behaving the way they have been.
We were at 195, we're back down. People thought we were going over 2. These China trade worries, and if they are, then are we decoupling the bond market and stock market? Now, stock market keeps hitting new highs. Bond market is suddenly the...
I think there's a lot going on with the bond market.
Are you worried about another inversion? Are we getting close again?
We are not.
Okay.
We do think, though, that if you look at the way overall economy-wide margins are moving, that there's a gradual erosion of those margins that will eventually lead to reductions in hiring. It will lead to less investment, and eventually it'll drag us towards, a kind of a modest recession in the out years.
How's the liquidity on all the overnight? We stop worrying about that as well. Everything's fine.
People stop worrying about that because we're not close enough to year end. We're going to get closer and closer to year end. You'll see increasing concerns about that as we approach the turn of the year. Of course, it'll be quarter end date. It'll be year end date. There'll be all kinds of things that people have to worry about. And the Fed has said that they'll step in and take care of it. And I think people are taking them at their word.
Your view on Europe is that it is improving, or that there's another leg down? That's the Alarians.
I think that there's, I think it's kind of just going along. I wouldn't look for another leg down. I'm not really sure how much further down they could go. I mean, no one's really doing well over there. But once again, they're facing some of the same situations that we have, which is, how does Brexit play out? What are all the different ways Brexit could play out? I mean, there must be 50 different ways that you could envision Brexit playing out. So how do you price that? And, I think for a lot of people, they can't price it, so then it's just a risk off, right? That's how you deal with things that you can't figure out.